Hey, it's Mack with PriceActionTradingSystem.com, and it's Wednesday. It's May 11th. This will be our chart lesson for a day. And my voice is a little, I don't know what's happened to my voice this evening. My voice is a little weak, so I'm going to try to move through this pretty quickly and wrap this up. We really, we're, there's a two-tiered channel working here lower, which is the red channel. But we got a break at the news. Um, when the crude oil came out, and it rallied up to the high and then instantly turned down. So we really, you could look at it either way. You could play this either way and use the shorter term trends within. Um, so, and notice that this is, once you started going lower here, just measure that and put it down. And that gave you a nice target. We actually went lower than that, but that got you right into the 2 o'clock hour. You're almost a perfect target. So, um, but we were also looking for a new low. But knowing this range target could have kept you in, because you had a new low as early as right here. So knowing this range target was down here and knowing the lower trend channel line is down here, notice how it continued to bounce off that till right before the close. So everything was weak. And late, normally crude does not really affect the ES very much, but lately it has. You can see we had a big spike up and then we took it back rather quickly. So as long as the crude continues to affect the ES, I would be flat going into any of those crude announcements, because they are affecting the ES. And this would have looked like a great short and you would have got burned here quickly. So if you just sat still and waited, you would have had a nice short up here. So, but let me back out. We'll talk about the trades. Again, my voice is a little scratchy and weak for whatever reason, so I'm going to wrap this up pretty quickly. But when I came in, we'd already had a short trap, and that's what, we're going up, and I guess we have a close outside. It's very questionable here, and a move to a new low. So you got two measured legs and a little trap, and then it's working higher. But notice that new low, and you get a first entry and a second entry. This was before I came in. This was 7 o'clock. So you already got your failed short. And so we're looking for prices to try to head back up here. And you get a little, there's some resistance. Let me put it on here where you can see it clearly. And you can see we broke out and pulled back and tested, and it's right off the trend line. It's not a great signal bar, but when it broke higher, this is one you might use a limit order, because it's not the best signal bar. It's a big one. Try to get a little better entry by dropping limit order. And you could have gotten filled a couple of 3 ticks back into this bar. And it was a quick, easy scalp. Even if you use a stop, it was good for a scalp. And again, there's more resistance across here, so I don't think I would enter here, especially when we're not getting to the other side yet and we're turning back down too quickly. We should have shot on up here. So that's telling you something. This resistance is holding over here. I don't think you want to go short. This was a great short, but I don't think you want to take it because you don't have a break of this trend line yet. It's holding all the way up, and prices are bouncing off of it every time. So just wait and see what happens. But anyway, there's a long there, and this one's real close to being lime green, but you could have still entered this with a stop, but a limit order works better because you got this is so close here. It would have worked either way, but notice what happens. You make a new high, pull back first entry, pull back second entry. There's a second entry long. You're probably going to get a retest of this high, retest this resistance across here at a minimum, and you get that right there. Then you pull back, and you get a failed. Notice you got that low right there. It's a double bottom. You count that as a new low, and you get a first entry, second entry. It doesn't really fail because it just bounces off that support again. But I like going long there, looking for that new high. It runs up quick, easy. A quick, easy scalp. You don't get any more. And then it turns down right here. The reason I like that short, it's a big bearish bar. We've tried to go higher once, twice. This is basically a double top here, and so you tested it once, twice. That's kind of the double test rule. Plus, it really kind of confirms this trend line that you got off those first two swings. It turned, and notice how it closed in. That one closed really inside. This one closed inside. So I like that one. Looking for it to go at least to the midline, maybe all the way down. And that's a nice move. And then it pulls back, and I like this one. Another big bearish bar. Look how it shot right through the EMA, pulls back, tests it, gets a big bearish reversal bar. Even though it's got one tick of green, that's a bearish bar. Confirms that trend line, go short right there. Another quick, easy move. You get one more chance to enter here, but I don't like that's too neutral right there, and you're getting too close to the lows. You did bounce off the midline as well, so I don't like that one. It probably could be green if you want to be aggressive. I'm willing to give it a green, but there's been too many other. These last two setups have been really good, so why risk on this one? But it fits our rules if you want to take it. And then you bounce off the midline. You bounce a little low for the previous support, and you get a first entry. You don't want to go long into that, and you don't want to go short there for sure. So just wait and see what happens. And then it breaks higher, gives you a failed second entry short. That's your reversal pattern. Just go long right there. The reason this one is green, normally I would have made this one blue, but it's right into the news. So you got to be a little leery going long right into that news. So that's why it's green. I just wanted to remind and talk about the. Didn't want to forget that the news came out right then and not mention that. So for that reason, I probably wouldn't take that. It is a trap, and you might get stuck in it in the news and then get whipsawed or something. And same thing here. You definitely, this is right at 9:30. You definitely don't want to take this. It's not a really good short. The trend line's working up. That's a bullish bar. So if anything, you might have gone long there when it failed. This is a double bottom, so first entry, second entry, but I don't think I'd go long right into 9:30 and right into that trend line. So you just kind of got to skip this. And the market really starts to settle down right in here. And notice what happens. You make this double. You've already got a double. You've tested that 1, 2, 3, 4 different times. We test it again, and look at that bearish bar all that way away from the EMA. I love those setups because this is where you catch the high or the low of the day, and guess what? This is the high of the day. If you catch that one trade, runners are easily safe, and you're set, at least to the other side of the range at the very minimum. And so that's the trade of the day right there. And then notice what happens. You're working down. You get a first entry, pull back, second entry, turns, goes lower, go short there. And when it comes back, this is one I like adding on if you didn't get out there. Add on right here. Look how bearish that bar is. And notice how it made a low. It's a double test of that. Closes are still down there. Couldn't close above those previous closes. I like that one. Looking for it to come back down here. And we did get a break of the two-tiered channel, so we're looking for prices to probably make a new low, and I would measure that move and look for a measured move at a very minimum, and that puts you back down there to the last lows. And notice it did bounce there. A few people probably just bought there because they knew it's probably going to be a measured move, but it just pushed on through. And you do get a close outside this trend line, a new low. So you really could actually go long here. That's two legs down, and we really overshot, and it's a failed break lower. So looking at it after the fact, when I was looking at it in real time, I really didn't like going long there, but look how far away that is from the EMA. I don't see any reason why you couldn't take that for a quick scalp, because it's a failed break lower, and the odds are we're going back to the EMA. And notice we push through it a little bit, but we never really go on the other side and keep going. It turns back down again. And that's what you want to see. But you get a break, you get an attempt at a new high, and a second entry short. new low, pull back first entry, pull back second entry. I made that one green because there's not a lot of room right there. But it's a big bearish bar. It's a double top. We don't quite have a new high. So there's some reasons to be a little bit concerned about that one. It may try to pull back and make that high again, and it does. But now you get your failed second entry long. Go short right there. Quick, easy move. It actually starts to get hung up here. It pushes on down. It's a scalp, and then and notice what happens. You got a new low. Pull back first entry. Pull back second entry. Go short right there. It's tempting to go short right there, but you see what would have happened. You would have got stopped out. I don't have the trend line on there. But you'd want to draw that up. That's the first close outside, so you're probably going to get one more push up, just like you did here. And look how bearish. And you get a second entry short. Look at it. This is that reversal pattern. It's very similar to this. Pushes through, pulls back, but that bar is too neutral, so I didn't like it. Wait on the failed second entry long, which comes here. That's your true reversal pattern. Go short right there. Pulls back, turns down right off the trend line. It's a little breakout pullback short. Go short right there too off the trend line, because that one, now you got your two swings. That confirms it. And then you make a new low. You don't quite have a measured move, but look what happens. Pull back first entry, pull back second entry. You got a break, close outside that trend line, a one tick new high, turns down, closes right inside, go short right there. Another quick, easy move. And that takes you into the 2 o'clock hour, and that's it. And again, another thing that I liked about going short here and here was the fact that that measured move, because we did have a new low in right there, so you had to be a little concerned about a bounce. But if you see this trend, this range here, you know that a measured move is probably going to happen, and we end up going much lower than that in the end, but that's after 2 o'clock. So yeah, really good trading day, especially in the afternoon. Generally the mornings are the better days. It was kind of quiet this morning, but I'm guessing people were leery of going into that crude oil news. And this is why you can't ever figure out what the news is going to be. It looked like it was real bullish, and all they did was run it up to sell it. And the price action still works even during the news, and it always works. But you don't know that you're going to get this break or when you're going to get it, and it's bigger because of the news. But we're just testing the highs again, the overnight high. And there would have been a gap on the daily chart because this is where we closed yesterday. And so let me just put that line on there and explain this, because I get a lot of questions about this. That line right there is where prices closed yesterday. And so when the market opens right here, your daily bar would have closed right there, and your daily bar today would have opened right there. So there's a gap between there and there. And generally prices, you go look at a daily chart and see how many gaps you see between the bars. You don't see many. They may open and close lower or higher, but they always back up and fill those gaps. So that's generally something you can almost expect to happen. It's not 100%, but those gaps generally get filled sometime during that day. So that's what this move up was to fill that gap. And notice how it started finding resistance there. People started exiting right there, knowing that it may turn down again. They've had a big move up, and it breaks up and tests the overnight high and then turns right back down. So that's what that gap was right there. And the white part is today's trading daily chart, the white part. This is the overnight stuff, and this was the close yesterday afternoon right here. So between the close and the white is the daily, is what you'll see on the daily bar. So the daily bar ends up having a high here and a low down here, so there's no gap in there. So I hope that's clear. But I get a lot of questions when I talk about the overnight, the gap in the daily chart, and that's what I'm talking about. So generally that's going to get filled on the same day. Like I said, go look at some daily charts and see how many of those gaps you see. You don't see many. They get filled pretty quickly. There's some old rule about 3 minutes, 3 hours, 3 days, 3 weeks, 3 months. If it doesn't fill it in 3 minutes, it'll fill it within 3 hours. If it doesn't fill it within 3 hours, it'll be um, sometime within 3 days. And there's some rule in there. I can't remember exactly what it is. All you need to know is that prices are going to try to fill that gap most of the time. Now they may not be successful, but they're going to try. So, and most days they will be successful. So anyway, good trading day. I'm going to wrap it up. We'll be back again to do it tomorrow and wrap up our week. But this is Mack with PriceActionTradingSystem.com, and we'll see you next time.